That is Mr. Wohorondoho, who will not be able to join us today, but we shall be progressing on with Mr. Gishinga. Let's take a quick item that will be setting the pace for our discussion. And Kenyans continue to struggle with economic survival. As a recent report said, 14 million Kenyans have been listed with the dreaded Credit Reference Bureau, CRB. This means that they have been blacklisted and hence will have limited access to credit facilities for business growth. The youth are feeling the sting as the situation was worsened by COVID-19 pandemic.
The blacklisted accounts jumped by a significant 45% in the 5 months between August and January after the Central Bank of Kenya lifted a 3-month moratorium. Data by Metropole, one of the 3 licensed CRBs alongside TransUnion and Credit Info International, show that the number of loans accounts in arrears for more than 90 days had jumped to 14 million by January this year, up from 9.6 million in August 2020. This illustrates the grim economic situation that was occasioned by job losses and business closures.
Nilikuwa nimeomba 2,000 na nililipa, lakini ilinisumbua sana kwa sababu hiyo 2,000 wakati nimeikopa hii wakati kumekuwa na hii msimu ya corona. Sasa hatukuwa tunapata pesa. Sasa hata kwenye unafanya kazi kapikipiki kakakata mafuta nikiwa tu kwa barabara. Nikajaribu kufikiria venye naweza pata dona, sikuwa na kitu kwa mfuko. Niliopti kuingia kwa simu yangu, nikakopa 2,000 kwa Tara, wakanipea. Nikajaribu hata niliita pikipiki nyingine ikakimbia kuniendea mafuta, ndo ikanifaurisha.
And as this happens, mobile money lenders have in the recent past been under fire from the regulators for sharing defaulters' data. New CBK data shows that the value of loans defaulted hit 423 billion shillings, or 14.1% of the total 3 trillion shillings loan book, a sharp rise from 351.73 billion shillings that was in default by the end of March 2020. With slow business recovery and jobs being hard to come by, affordable and flexible payment terms for loans could be the saving grace.
All right, Mr. Gishinga, great to see you and looking sharp as always. Let's dive into our discussion. Well, 14 million Kenyans listed by CRB. What does this tell of our economic times?
Very shocking statistics, Abi. Indeed, this is a symbol of how bad things got, particularly last year when a lot of young people lost jobs due to the COVID-19 pandemic. That said, it's good we also understand the statistics, and I actually managed to take this up with the authorities. And the feedback I got is that it's not 14 million people, it's actually 14 million accounts. And one person can easily have 3, 4, 5 loan accounts. So I think it's important we put that into perspective. But still, the point is made that it's not a good time in terms of the state of the economy, and the sooner we can start thinking about reopening the economy and creating jobs, the better.
Okay. And Ken, the other concern definitely is on from that news item we just aired. The majority of the youths are saying, how can CRB work to be able to be more lenient? Are there models that we can tap into as a country where, as much as you are listed in the CRB, it shouldn't be the end of you ever thinking to borrow?
Absolutely. I mean, I think we can learn a lot from the American model, where a credit score is actually not meant to punish you, but it's supposed to help you get more and more benefits. So it's supposed to be more of a supportive thing. I think the way it's been framed in Kenya, it's more of a punitive measure, it's a punishment, and your name is there for 7 years. And that's the reason Kenyans have a very negative attitude to it. But I think if you're able to reward people, for example, people who have very good scores, people would be able to get discounts, be able to get benefits, then I think a lot of people would be able to think of it in a more positive way.
All right. Now let's talk about our next topic. It's touching on the free trade area, where the stakeholders in the exports industry are upbeat about the Africa Continental Free Trade Area, as it now creates numerous opportunities for economic recovery. Well, in a roundtable meeting, the Kenya National Chamber of Commerce and Industry championed for more partnerships and proper execution policies to accelerate an economic bounce back for Kenyan exports. Let's listen to that and quickly get some reactions.
KNCCI will inform, advise and support exporters in promotion of businesses in the countries of KNCCI partnership and organize activities to that effect, including exchange visits and business network platforms, help in promoting exporters' products and services, build the capacity of exporters, organize more networking events to enable exporters to exchange market information, knowledge, experience, and boost best practices. Exporters to understanding the legal, regulatory, and policy environment in potential countries of export. Develop and manage a comprehensive export that we...
All right, Ken, looking at where we are on this free continental trade area, well, the Chamber of Commerce, which is the body bringing together business and traders across the country, they are rooting for more partnerships. Should indeed be the other way around, where the FCTA is effectively redefining how trade should be conducted in Africa? Wasn't that the purpose in the first instance?
Well, I think both are equally important. I think there has to be a bottoms-up approach and a top-down approach. I think what the Chamber of Commerce is trying to do is build more grassroots partnerships. But you're right, even at the top level, there needs to be more of a strategic thinking around how labor and capital will move across these borders. So I think success looks like when that moment when the top-down approach and the bottoms-up approach sort of reach that middle point.
All right, thank you so much, Ken. Our time is indeed quite far much spent, but we do appreciate your great insights into this weekly segment, BizChat Weekly. Remember, keep it alive here on our social media handles. For now, we want to take a quick break. We'll be back with some more news.